Hi everyone, welcome to another episode of Investors Insight. I'm Joel, Research Analyst at iFAST, and joining me today is Iris Fan, Asia Equity Analyst from UOB Asset Management. In today's episode, we'll be discussing UOB AM's latest ETF launch, the UOB AM FTSE China A50 Index ETF. Could you share some of the key features of this ETF as well as why investors should consider investing into it?
Yes, definitely. The UOB AM FTSE China A50 ETF is a great option for investors who are looking to gain exposure to the top 50 A-share companies listed in Shenzhen and Shanghai Stock Exchange. There are a few key features that makes this ETF worth looking at. So firstly, the ETF helps investors to gain diversified exposure to the Chinese equities market at a very low cost. So investors do not need to buy into individual stocks themselves, and that helps them to save on the trading costs. And secondly, this ETF is very convenient for Singapore investors, as this ETF is listed on Singapore Exchange and is denominated in SGD. Unlike most other China-focused ETFs, which are mostly denominated in HKD or USD, as they are listed in Hong Kong or US. So it could be a hassle for investors whose portfolio is denominated in SGD to invest in those ETFs. And also, you can use your funds in SRS to buy this ETF, and without having to do any additional customer account review, since this ETF is listed as an excluded investment product.
This sounds like a great option for Singapore investors. Could you also share how this ETF compares to some of its peers or competitors?
Of course. So the UOB AM FTSE China A50 ETF has a higher dividend yield compared to its peers, in a sense that the average dividend yield for this ETF is around 3.6%, which is higher compared to the all caps dividend yield, which is about 2.4%. So for investors looking for income, this is a great option, on top of getting capital appreciation from the ETF. Besides that, we will need to consider the minimum lot size as well. So for this ETF, you can buy in single units, whereas for most Hong Kong listed ETFs, you might have to purchase in 100 units to form one lot. So this will help you to give you greater flexibility in terms of your overall portfolio management.
That's great to hear. This is especially useful for investors who have smaller account size and they don't have to invest such a huge sum into a single ETF. Thank you, Iris, very much for your insights. For our viewers who would like to learn more about UOB AM's latest ETF, you may visit UOB AM's website for more details. So now that we've heard from Iris about the UOB AM FTSE A50 China Index ETF, which aims to replicate as closely as possible the FTSE China A50 Index before expenses, we've also invited Emerald Yau, Head of Equity Index Product Management at FTSE Russell, to share more insights about the index. Emerald, could you share more about the FTSE China A50 Index universe and how companies are selected for inclusion into the index?
Certainly. The FTSE China A50 Index was launched in 2003. It tracks the performance of the 50 largest A-shares listed in Shanghai or Shenzhen Stock Exchange. The index is market cap weighted. Larger stocks, larger weight. It's simple as that. When we select and weight the concessions, we have baked in a few important criteria. All concessions are subject to the northbound Stock Connect eligibility, and they are accounted for foreign ownership limits. Sanctioned stock treatment is also applied on this index. The FTSE China's A50 approach is very simple, very transparent, easy to understand, and that's what makes the index very popular among the international investor community for tracking the China A-shares performance.
What about the sector allocations and the top holdings of this index?
Financials represents the largest industry exposure in the index, about a third of the index weight actually. This includes large insurance companies like Ping An Insurance, as well as the large state-owned banks like the Industrial and Commercial Banks of China. Consumers industry, including both consumer staples and consumer discretionary, together also represent about a third of the index. This is particularly because of the inclusion of dominant Baijiu companies like Maotai, Wuliangye, and also the inclusion of premium domestic brands like BYD, Gree Electric Appliances, etc. And after consumers, industrials also follow with a 14% weight, with other industry bearing a smaller single-digit weights in the index. One thing to notice that there's one industry currently missing from the index, and that's real estate. I don't think that's any surprise here because the challenges the Chinese real estate companies have faced in the past few years, the price and size of these stocks have shrunk, and as a result, the Chinese real estate companies did not make it to the largest 50 stocks, and they have actually fallen out of the index since 2023. Well, there are many interesting companies in the FTSE China A50 index, but let me focus on the top 5. The first one is Guizhou Maotai, that's a 12% weight in the index. This is a leading producer of high-end premium Baijiu liquor. The second one is 7% weight in the contemporary Amperex technology. This is a leader in development and manufacturing of the lithium-ion batteries for EVs and for energy storage systems. The third one is China Merchant Banks, 5% weight in the index. Is a major Chinese banks offer a wide range of financial services. BYD is ranked number 4 currently. It's a 4% weight. It's a rising Chinese multinational company that specialized in electric vehicle, renewable energy solutions, rechargeable batteries. And number 5 is China Yangtze Power. That's also around 4% weight. It is a state-owned enterprise focused on hydropower generation. It is the operator of the Three Gorges Dam. And as you can see, it's pretty interesting and diversified exposure in the top holdings. The top 5 companies I just mentioned represent 5 different industries.
Are there any key features of the FTSE China A50 index that investors should take note of?
Yes, definitely. I would say that the FTSE China A50 index is highly representative of the China's growth transformation. For example, the index has an increasing exposure in the domestic consumption that is in line with China's transformation towards a consumption-driven growth model and the rise of domestic brands. The two consumer industries together represent a third of the index. Or, for example, the decarbonization journey that China is on. The FTSE China A50 index has been getting greener over time, with more concessions involving in a range of the greener businesses such as the electric vehicle, hydropower, energy storage.
What about in terms of performance? How has the FTSE China A50 index performed relative to its peers?
Over the past 12 months, the FTSE China A50 index rallied 15.6%, and that is a better performance versus the overall large and mid-cap A shares that returned 13% over the same period. Relative to the full China equity universe that covers both onshore A shares as well as the offshore Chinese equities, the FTSE China A50 index is way more stable. It has demonstrated lower drawdown, milder volatility over short-term, medium-term, and long-term periods.
Thank you, Iris and Emerald, for joining us today. For our viewers, I hope you have gained some valuable insights today, and we'll see you again in the next episode.
Bye.